Welcome to My Finance Teacher. Today is 1st of November 2017. Let's have a look at crude oil today, as I have been asked to do that by one of the subscribers. So in front of you is a weekly chart of crude oil price, and we have here intermediate and daily cycles, just like we do in gold. And generally I think intermediate cycles in oil, shown by these little lines, last for about half a year as well. So in 2016, I'm not sure about this cycle that I've indicated with these blue lines. This cycle might be counted as a separate one, even though in that case it's going to be short, only 3.5 months long instead of half a year long. Or possibly it could be counted as part of this longer cycle, which stretches from August 2017 all the way to July 2017. So in that case this cycle might be a little too long, so I'm inclined to separate this short cycle from the following one starting in November, but I'm not 100% certain about this one. In that case it looks like it will consist of 2 daily cycles. So having in mind that these intermediate cycles in oil last for about half a year, this current cycle has been going on since June or July, and we are close to the time when we should reach the cycle top and starts the declining phase of this intermediate cycle in oil. Now let's have a look at more details. For more than a year already, crude oil has been consolidating in this range between 40 and low 50s, between $40 per barrel and low 50s, and we are currently at the higher range of this consolidation range. So for that reason I think it is quite likely that oil might bounce back from this upper boundary, and we might start our declining phase of this intermediate cycle pretty soon. Although there is a chance that oil might break through the consolidation zone. In that case we'll probably see some sort of nice follow through to price levels of about 60 or so, close to a high in 2015. There is a chance for that breakthrough, but I'm more inclined to think that since we have already been going on for several months in this intermediate cycle, we'll probably need to cool down first before we have a breakthrough next time in the next intermediate cycle. Now let's have a look at daily cycles. This is a daily chart of oil, and daily cycles seem to last for about 1.5 months or 2 months. Again, I'm not really certain about this cycle indicated with blue lines. This gives us just over a month, which might be a little too short for a daily cycle in oil. So it is possibly a part of an ongoing daily cycle, which in that case has been going on for about 2 months. And again, if that is the case, we are likely to turn down soon. If we count this blue cycle as a separate one, we might have some potential in this daily cycle, although as I mentioned we've reached some strong resistance levels, and it's likely that oil will pull back down from mid 50s. Some other reasons for a pullback is the 10-day RSI is overbought, and we've stretched relatively far above the 10-day moving average. Whenever we've been stretched that much, and we haven't been stretched that much over the last year or so, we tended to have a considerable pullback. And finally, what are the projections going slightly longer term? As I said, this intermediate cycle has been going on since June, and we are close to the time band for this intermediate cycle to reach its top and to enter a declining phase. So I think we're going to cool down over the next several weeks, and as we finish this daily cycle, probably sometime in the second half of November, we'll start another daily cycle which will allow us to have a temporary bounce in oil price. However, generally we'll still be in the declining phase of the intermediate cycle, so this bounce will only be short-lived and will continue down probably sometime into end of December or early January, after which we might have a push within the next intermediate cycle to reach the price levels of close to $60. So that is my projection. If you think this has been informative, subscribe to the channel, hit the like button, and I'd be interested to see your comments. Thank you.